What are the top 10 biggest mistakes I see beginners in the stock market make over and over again? Today I'm going to share with you guys those 10 biggest mistakes. Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the top 10 biggest mistakes I see stock market beginners make over and over and over again, guys. I see these constantly made, and it's frustrating, but it's natural to make these mistakes because you're just getting in the market, guys. So let's just go ahead and get right into this. So the 10th one I see people make over and over again is getting into stocks just for the money. They get into it just because they heard you can make money in the stock market. They heard you can make money this way. Maybe they've seen someone in real life make money. They see the guy on TV who's a famous investor, Warren Buffett or whoever, making money from stocks, and they're like, I don't want to get in stocks. You got to understand, just like all things in life, if you want to really be good at it, or especially if you want to be great at it, you've got to have a passion for it. It's got to be bigger than it's just for the money at the end of the day, guys. If you want to be a professional athlete, you need a lot of talent, but you also need an insane work ethic and to work hard for 20 years straight to become as great as you want to be, right? If you want to become that great person at that sport, you need to love that sport and have passion for it, because it's going to be hard to keep pushing on day in and day out if you don't truly love it at the end of the day, guys. So make sure you're not getting in stocks just for the money. It's got to be because you truly enjoy looking into companies, finding the next great stock to invest in, all those kinds of things. You got to absolutely enjoy the whole process behind it. If you don't enjoy that process, it's going to be very hard for you to sustain that type of work ethic that's needed into stock market investing year after year after year, guys. So that's the one of the biggest mistakes for sure I see. Just people getting into it just for the money. They think it's easy money or something. Let me just invest in some stocks. The number 9 mistake I see stock market beginners make all the time is investing too much right off the bat. Now, this isn't usually an issue for younger investors. People like myself that got in at 18, 19 years old, when you don't have crap for money. My first investment, I think, was like $200 or $300. It was like nothing, guys. When I see this one, is usually it's older people, people in their 30s, people in their 40s, sometimes even people in their 50s who have never really invested in the stock market, or at least have not picked stocks. Maybe they have a 401k or something, but they never really or a stock picker, for instance, like I teach on my channel, right? And sometimes I'll see them, they already have good sums of money saved up, you know, 40,000, 80,000, 120,000, whatever, and they'll just start investing like crazy right off the bat, tens of thousands of dollars. You don't want to do that right off the bat. If the best scenario is you're young and you get in when you don't have much money, and you experiment and you kind of get the ball rolling. And if you lose some money, okay, it's a little bit of money. If you're older and you make some mistakes right off the bat, and you've already got $10,000 in the market, $100,000 in the market, $1 million in the market, those are going to be very, very costly mistakes at the end of the day. It's not going to be like, oh, I lost $10. It's going to be like you lost thousands of dollars, more than likely. So if you're a little bit of an older investor, you got a good chunk of change saved, don't just go crazy right off the bat. Like, start off, you know, say you want to eventually invest $100,000 in the stock market. You think that's the place for you to do it. You know, start off slow. Maybe go 10,000 in over the first, 6 months. Then maybe if you feel comfortable after those 6 months, maybe add another 20,000 in. And then if you feel more comfortable after another 6 months, then add another 30,000 in, and then add the rest the next 6 months. But don't just go push it all in there right off the bat, guys. That's a huge mistake I see. Number 8 is not putting in the work. As with all things in life, if you want to be good, and especially if you want to be great at something in life, you need to absolutely put in the work. You have to put in the work at the end of the day. What does it mean to put in the work? It's doing all the research necessary to find a great stock to invest in and go out and invest in that stock. It's reading all the reports, the 10Ks, the 10Qs, listening to conference calls, researching about this company fully, Googling any news about it, finding, information about the CEO from the past and decisions they may have made in the past and why that might impact them in the future. You need to research tons of stuff, guys. You gotta be willing to put in the work. If you're not willing to put in the work, you'll always just be an average investor, or you may even lose money in the market. It's hard to make money in the market unless you're in the perfect scenario when the market's just shooting up. Like this year is a phenomenal year to be in the market, right? The markets are just shooting up. There's tons of stocks that are way up, and a lot of the hype stocks are up, way up. The super popular ones like the Shopifys, the Amazons, Apple, Google, like some of the biggest names out there, Facebook, the hype names, those stocks are all doing phenomenal. So a lot of beginners can get in the stock market and just put money in those. And in a year like this, it just seems like, oh, this is easy. Well, guess what? Not every year is like this when the Nasdaq's up 20% and we're only, what, 8 or 9 months through the year, guys. That does not happen all the time. A lot of years, it's a grind. It's a grind. And some years the market goes down. If you're not really putting in that full research work, then you're not going to get those great gains over time, guys. You've got to be willing to put in the work. Number 7 mistake I see beginners in the stock market make time and time again is diversifying too much. So let's say you got $1,000 in the market, right? You're a beginner in the stock market. You don't have a ton of money. You got $1,000 in the market, right? I see all time and time again where people have 20, 30 stocks invested at $1,000. Like, don't be that diversified. You don't have that much money to even diversify. Especially if you're young, you should not be diversifying crazy amounts like that. Like, because guess what? You're in stock number 27 is probably a crap stock. There's no way you found 27 great stocks to invest in. No way. There's no way you found 27 great stocks to invest in, and all those stocks are fairly valued or undervalued. No way possible. That stock 27 is probably a crap company, or it's probably an overvalued company. So you're just stuck your money in an overvalued company, or a company you don't really believe in that much. That's a really bad decision, guys. If you're newer in the market, you should hold 5 to 10 stocks. If you're older in the market and you have a substantial amount of money, then you should probably hold 10 to 15, maybe up to 20, but I still don't even recommend 20. I recommend 10 to 15, even if you're older and you got a substantial amount of money in the market, guys, because once you start getting too many stocks at the end of the day, you're going to be in a lot of bad stocks probably at the end of the day, guys. So, and you don't ever want to go, too far the other way where they're only in like 1 or 2 stocks, because then you're so heavily reliant on 1 or 2 stocks. You never want to be there. I've been there before. I've gone all in on a stock or all in on 2 stocks, and that's a dangerous place to be as well. You don't want to be that reliant on something like that, guys. So try to stay in that, anywhere from 5 to 15 stocks. That is really the best place you really want to be, especially if you have small amounts of money invested. The number 6 mistake I see stock market beginners make a lot of times is not fully realizing you can lose money. And I know this sounds like a funny one. Well, investing, of course you can lose money. Not a lot of people fully get that through their head, and that's why a lot of people will try stock market investing. Maybe their first stock they lose money on, and they're like, screw this, I'm out of this. The stock market's a scam, I lose money, whatever. Going in, when you invest in anything, realize you have the chance to lose all of your money. Not just some of it. You have the chance to lose it all. You definitely have a chance to lose some of it. When you make any investment, especially in the stock market where, prices fluctuate literally Monday through Friday, unless there's a holiday, right? Every single week, prices fluctuate, guys. So just expect that you may lose money. It's very possible that you will lose money in your first year. Very possible, guys. You're probably not the best at it right off the bat. And unless the market shot up that year, you probably lost money. So just expect that there's a possibility that when you're a beginner in the stock market, you can lose money. Get that fully through your head, and that will help you get over that hurdle of, oh my gosh, I lost money, I'm out of this, it's a scam, or I can't make money in this somehow. Like, give it some time at the end of the day. Realize it's possible you can lose money. Number 5 mistake I see beginners of stock market make is thinking too short term. Like, they think too short term. Like, they think, one of their investments was either not successful because the stock market went down in the short term, or they think they're a great investor because one of their stocks just happened to shoot up in the short term. Like, don't think short term. You need to be thinking long term about this stuff. Realize prices fluctuate for a lot of different reasons. Just because a stock you invest in went down in the short term does not mean you made a bad investment over the long term. In the short term, if you're a short-term trader or something like that, yeah, that means you made a bad mistake. But if you're a long-term investor, which is what I preach on this channel, what your stock price did over the last week does not mean you made a great investment or a bad investment at the end of the day. Don't think short-term about this stuff. Don't make judgments on your investments over what is going on in the short term. Focus long-term, what's going on over the next couple years, and that's where your focus should be. And if you lost money over, a 3-year span, a 5-year span in the stock, then you absolutely made a bad mistake. But if you lost money in a 3-week, 3-month span, come on, guys, that's way too short-term, unless that's your philosophy of being a short-term trader, which I would never recommend to anyone ever, because I've never seen it done successfully over the long term. But don't think short term, guys. Just focus on the long term. Focus on the vision. Don't get caught up in the short term price movements at the end of the day. Number 4 mistake I see beginners in the stock market make is caring too much what others think about their stocks. So many times people care way too much about what another person thinks about their stock. There's going to be tons of articles written out there about your stocks. There's going to be people on TV that talk about your stocks. There's going to be people on the internet that talk about your stocks. Negatively or positively, you can listen to them But don't make that judgment. Don't make a judgment whether to buy or sell a stock based upon what someone on the screen said to you. Whatever article you were reading. Oh, I'm bearish on such and such stock because of such and such. Like, don't make your judgment based upon what someone else thinks. Whatever you think is what matters at the end of the day. I get so many people always asking me about particular stocks, and I'm like, blessed to be in that position where people care enough about my opinion on a particular stock. But at the same time, I always answer back, my opinion on such and such stock is irrelevant. One, because I might not even follow that stock closely. Two, because my opinion doesn't matter. If I could count up how many stocks I didn't really believe in or would not have invested in that went up massively, it would be higher than the ceiling. It would be ridiculous, guys. And how many stocks, Warren Buffett did not invest in. The greatest investor ever, Warren Buffett. How many stocks has Warren Buffett passed on that maybe he looked into or heard of and have gone up hundreds of percent or thousands of percent? There's been massive amounts of them. So don't care too much about what another person thinks about a particular stock. Care what you think about that stock at the end of the day. It's fine to listen to people's opinions, but don't make a judgment of a buy or sell based upon another person's opinion at the end of the day, guys. It's a big mistake I see. Number 3 biggest mistake I see stock market beginners make is buying penny stocks and a lot of these pink sheet companies. A lot of these penny stocks and pink sheet companies and all these different little mumbo jumbo, is a 2-penny stock or whatever. The majority of those, they don't have to disclose any financial information. They don't have to get audited the same way as an NYSE stock would, like an Apple or something like that. They don't have to, you can just literally write down whatever numbers you want. I could literally come out with my own penny stock probably within the next week that you guys could invest in. It would be based upon the financial education channel, right? And I could write down whatever numbers I damn well please on the revenue, on the balance sheet, make up whatever I want. Oh yeah, we brought in $10 billion in revenue this year, and no one's there to audit it with a lot of these penny stocks, guys. It's not regulated the same way most stocks are regulated in the NASDAQ and the NYSE, S&P 500. Why they still even allow it is beyond me. Why the government still even allows penny stocks to exist, these pink sheet companies and stuff, it's mind-blowing to me, but I see time and time again beginners in the stock market get into those stocks because they think it's an easy way to make money. When you're in those type of stocks, generally speaking, it's like you might as well go to the casino. Matter of fact, I would rather go to the casino than mess with a lot of those penny stocks because you have no clue what's going on with those companies or if there's even an underlying company that exists underneath that company, guys, or whatever that paper says at the end of the day. So I see this time and time again, people messing with these type of stocks, and it's painful for me to watch because they don't know what they're getting involved with. It's literally gambling, and some people love to gamble and some people believe in gambling and say they're the best at poker or whatever, or the best at playing a slot machine, whatever. But in my opinion, don't ever mess with penny stocks. Number 2 biggest mistake I see stock market for beginners make is buying stocks with poor balance sheets. A lot of stock market beginners, they don't even really do enough research into companies. 1, 2, they don't really look into balance sheets. You need to have companies that have phenomenal balance sheets. You don't want to be investing in companies with poor balance sheets because if you invest in a company with a poor balance sheet and that company comes upon some hard times or something in the economy happens, that company's at a big jeopardy of potentially going out of business and filing for bankruptcy and you losing potentially all your money, especially if you don't sell out, early enough. So I see that with the stock market for beginners a lot. I see them invest in this stock or that stock, and it's like, have you looked at the balance sheet on that? They got $10 billion in debts and they got $100 million in cash. Like, what happens when those debts come due, and what happens if that profitability erodes over the next year or two? What's going to go on with that company? They're going to have to somehow either restructure that debt, which when you got that much debt, you probably can't, or you have to go out of business, guys. So I see stock market beginners make this mistake all the time, going into poor balance sheet companies. Don't do that, guys. Just invest in companies that have phenomenal balance sheets. Now, before we get into the number 1 mistake I see beginners in the stock market make over and over again, check out my 11-part stock market investory mastery course, which is linked in that description. It's the first thing linked there. If you are a beginner in the stock market, that course should help you phenomenally. If you're an advanced investor, that should help you as far as understanding the way I invest and pick stocks, guys. The number 1 mistake I see beginners in the stock market make time and time again is buying stocks outside of their circle of competence. What does this mean? This means when you buy a stock that you don't fully understand what that company even does. You don't fully understand where that company gets the majority of its money. You don't fully understand where the company's vision is going. I see this time and time again where somebody just hears about a hot stock and they put money into that stock without really understanding what that stock even does, what that company even does to make make money. Maybe they know just a very small amount of it, but they don't really have a full understanding. When you go to invest in a company, make sure it's a company you have a full understanding of, guys. Don't mess with companies that you don't fully understand. If you want to buy, Apple stock, for instance, you better understand that the majority of Apple's revenue comes from iPhone. And the next is probably the Mac and the iPad after that, and services. And you better understand what growth rates he's at. And you better understand, how much smartphones are growing in the developing markets like China and India and places like that. You better understand all this stuff if you're going to invest in a stock like that. You can't just iPhone, I got an iPhone, so there I can buy an iPhone, Apple stock. At the end of the day, guys, you got to fully understand these companies you're about to invest in, where they're getting their money, and where they expect to be getting their money from 2 years from now, 3 years from now, 5 years from now, guys. I hope you really enjoyed this today. Top 10 mistakes I see beginners in the stock market make all the time. Leave it a thumbs up if you really enjoyed this. If you just came across this channel, you may want to subscribe. We talk personal finance on the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. Thank you for watching, guys, and have a great day.